Hello and welcome to this very special show today titled Exploring Infinite Possibilities in Real Estate Finance. And I'm in conversation with Amit Goenka. He's the CMD of Nisus Finance. Amit, before we get into the conversation, a little brief. Tell me a little bit about what Nisus Finance does.
Nisus Finance has a singular vision and has been set up with the objective of transforming India and now Bharat to become what we envisage within the Amrit Kal 2047 vision, to be absolutely a developed economy and effectively become self-reliant, become when we become the third largest economy, to enable our cities, our urban locations, our metro locations to become globally competitive. That happens only with smart capital solutions, with smart investments, and the proper guidance which is available to those who are engaged in transforming urban landscapes.
Superb. So obviously this is a very important space because, like you said, India's growth trajectory is on the upward way. But Amit, how did you get into this field? Tell me a little bit, because somebody told me that 10 years ago you were working, you had one desk in a co-working space, and now you're here, you're launching your own IPO. So tell me about that transformative journey.
When the Presto 2 of 2005 came into being, it was obvious that the entire development and real estate industry will transform in a very mega way with global capital walking in. Clearly, we saw the GFC of 2008 and a lot of disruptions thereafter. It was effectively the visioning that we saw 10 years ago, where it was obvious that the government allocation to urban infrastructure is very large. We saw the Pradhan Mantri Awas Yojana being launched, and therefore the focus of the government, of all the bodies in India, to create a large urban center to effectively make India the largest receiver of global capital was clearly laid out. That needs a very clear framework for capital to walk into and invest into India. That can only be done by private participants like ourselves. Having spent 15 years prior to this into mergers and acquisitions, public equities, private equity, real estate, it was obvious to me that if you can create a world-class investment institution, the way we have listed companies like Blackstone or Apollo or Advent or several others who have been absolutely at the forefront of investing into emerging markets, of creating world-class assets and owning them and making it available to the population for consumption, is really a story that can be born from India. And that can happen with people who understand India, the backyard of India, what happens in villages, in metros and cities, not just 5-6 cities, but happens pan-India, in Bharat in general. So being a son of the soil, it was important for me to be able to use the backdrop, the education and the experience to put to good use and use the vision that I have to be able to create a large urban financing institution come into reality. So that's really what that vision, that dream, that mission is what has started from, as you rightly said, one desk to now going public.
And Amit, tell me a little bit about the operations, because what are you doing to help this sector grow? What are you doing to make the most of the opportunities that you're seeing? I want to talk to you. I want you to tell me a little bit more about the funds that you all are managing.
So, as I mentioned, when we see large capital providers, especially private equity or private credit, their focus has been large players and has been to few cities and few metro locations. We've seen a lot of commercial development in Bangalore, maybe Hyderabad, some in Mumbai. We've seen large township come up in metro locations. But what I saw really is that India resides in its villages, in its non-urban spaces. We're still 65% non-urban. And urbanization is obviously happening at a very fast pace. With the total amount of roads, railway, ports, airports getting constructed, today urban centers have multiplied from being 6 cities to potentially 30 cities. There's no solution available for that. So there is obviously a very large, capable set of developers who are developing all asset classes for their cities, from residential to commercial to retail to hospitality, and they do not have access to this capital. Right. So we became the enablers of that capital, saying, can we partner with you? Can we help you complete these assets? Can you make contemporary, sustainable and future-looking assets for the next generations? So that's really what we started off in 2014 with the first fund, which was really an asset performance fund, helping people who have great capabilities, great opportunities, great assets, access the capital, invested with them, saw them transform those projects into absolutely contemporary modern assets comparable to next to none in any modern city. And so we've continued that journey with first the first fund, then the second fund, which further saw us going from 5 cities to 10 cities and today 20 cities. And obviously our footprint is to see if we can go to 50 cities and make that transformation so that India truly becomes global. It is not limited to 3-4 cities. It is not limited to congestion. It is not limited to only the development happening in these 4 metros, but it's actually a 50-city country. Yeah. That's where the growth engines are. That's where agriculture, manufacturing, services, that's where startups are residing today. So clearly that has to be supported by urban infrastructure with modern housing, modern commercial spaces, modern retail, modern hospitality, education, healthcare. All these asset classes have to support that. So when the government allocates $1 billion to a infrastructure project, a corresponding $25 to $30 billion worth of urban infrastructure needs to be developed around that. That's where we step in. We invite private and global capital to partner in these high growth opportunities, which are the new growth centers for our cities and for our urban locations.
That's very important, because what you said, it's not just about that, say, 1 billion that is being done. It's about what's happening in the ecosystem, and that has to be enabled. Amit, what else I want to talk to you about is, first, if we talk from the journey. 2020 Black Swan event, pandemic, COVID-19 hit everyone, which has been devastating for some, but has been a great opportunity for some businesses. How were you able to use that moment to make the most of the opportunity that came about and bring about a transformative change? I want to know about that.
So, we started in the worst of times, Sumit. We started our business in 2013-14, and only mad people would have got into the sector at that time. There was irrational exuberance. There was a plethora of less than corporate governed players. There was irrational amount of money coming in from all sorts of players, from NBFCs to foreign capital. And it was a lot of bloodbath, a lot of mayhem happening. And it started to transform then radically with the introduction of the insolvency code, with GST, with RERA, then demonetization, taking away a lot of these players out of the market. And it started to formalize. So we always built ourselves to be anti-fragile, to work when things were going wrong. How could we make money? How do we still keep our portfolios very defensive? How do we still find those people who have their eyes trained on outcomes rather than just capital, who are trained and who have the vision to build products for the next generation? So it was a deep mining experience of creating products and solutions for those development companies who needed our capital and our support to come out to the other side of the tunnel. So that's really what we did. Obviously, COVID became a great accelerator of consolidation. While all of these regulatory interventions did cause some consolidation, but really COVID was one of the biggest enablers of consolidation pan-India across stakeholders. We saw a lot of NBFCs exit or fold up. We saw a lot of private equity funds or credit funds exit or fold up. We saw a lot of banks exit this space and start focusing on SME and retail financing. So the entire wholesale credit, the entire wholesale financing, and the entire institutionalization of capital which was happening or trying to happen really took a sidestep, and domestic managers like ourselves who've been in the space for 10 years started getting more and more prominence. So the space opened up in a very wide way. Today the government of India launched in 2020 a Swami fund for the purpose of completing assets. We became a national partner to them. We said let's join them and let's create this journey that we've envisaged to complete assets, to create urban locations, to give people the housing, the offices and other asset classes as we partner with larger players to do that. So it became a great amount of enabler for us because, people who had to fail, it separated the men from the boys. People who could stay on, who could sustain their path, who were resilient, despite capital not being available, obviously have now come up on top, and we were able to support them in a bigger way.
I'll play a bit of a devil's advocate here. So on one part, you're saying, yes, you're looking at some kind of growth in the real estate space. You're seeing that growth. But from a layman point of view, there will be people who say that, the market's overvalued. There is not enough demand. There is too much supply. Earlier answer, you said that, some listed players have grown 3 times. So Just clear the air about this. What, from your point of view, are you seeing as the growth in the Indian real estate space?
So there were pockets of of high valuation that have emerged, especially in the luxury segment. Now that's a very, very small curated market. You know, you'll have the Tony South Mumbai, you'll have certain central parts of Bangalore or certain parts of Gurgaon, which will seem expensive, but then that's the aspiration of that 3 or 4% of the demographic profile who need those spaces, who are moving from a bungalow to a unified living, or to a common living, or to a gated community. So clearly that is really where the disruption is happening, that the next generation is saying, I don't want to stay in a bungalow, can I stay in a more integrated community? Can I stay with my friends? Can we, as couples go out? So clearly that is causing that value inflation only in the luxury segment. That's not really affecting the mid-income housing, because that's a mass production. That's where we are. We're obviously in the affordable and mid-income housing space. We're in affordable commercial space, in affordable retail spaces. So that space continues to be a very large consumption asset class. Today, clearly the demographics have moved to a point where there's been a huge financialization of investments. It has moved away from keeping in banks or FDs or keeping in locked up or in gold to actually investing in the future, investing into stock markets, investing in their own homes, their own offices. So this entire financialization of real estate, also led by products like REITs, SME REITs, etc., or tokenization, have further accelerated the interest of the next gen to start consuming real estate as an asset class. So a huge amount of the Indian savings is, or their current income is actually getting plowed back into real estate as a ownership pride, as something for themselves and the next generation to consume and own. And I think that is a very, very large space. We're looking at developing $1 trillion worth of assets in the next 6 years. We're hardly at 350 billion. So you can imagine the growth that we have to chart. And again, we talk about these specific examples in a few cities. As I mentioned, India does not reside in cities. It resides in Bharat. That's where we are. If you see the way we went to Indore, we went to Ahmedabad, we invested in Surat. You look at the cities in the last 10 years, the way they've transformed. The road, the airports, the entire development quality, the lifestyle aspirations, as wealth has got created, as next generation wants to actually use their wealth to be able to stay and consume proper asset classes. So I think that is really where the story is unfolding. So it is not the peripheral story that gets talked about as 4 cities, what's happening in Mumbai, Pune, Bangalore, Hyderabad, Chennai. It's actually the story of an Ahmedabad, of an Indore, of a Raipur, of a Visakhapatnam, which is mind-boggling. Those cities are growing at breakneck speeds. And that's the opportunity set.
100%, absolutely. That is definitely where the opportunity is. But Amit, what is your company's USP? Because there are many players in this. You yourself named a few earlier. But what is your company's USP to be able to create a high-yielding but low-risk portfolio?
That's the secret sauce, of course. As I said, we've been anti-fragile. And so we are looking at opportunities to solve short-term problems for people who are developing these asset classes. There could be short-term cash flow mismatches issues. I have launched a project, I've got substantial sale, but I need to accelerate it from point A to point B. After that, it becomes self-sustaining. So we act as a plug for that capital. We don't think that development industry needs permanent capital because consumption is very large, internal accruals are very large. So money as a plug is a great solution. We're not necessarily owning assets in India. We're helping development companies complete and allowing consumers to consume and own those assets. So because we're not owners of those assets, we have to provide the right plug of capital at the right time in the cycle of development. So there are many times when projects will need a large injection of capital to load FSI and complete a project in a very short period of time, or to do a joint venture, or to do certain other strategic interventions which need a significant amount of capital, which is obviously available from the sales. So we're just providing that ability to bridge that short-term asset liability mismatch, keeping the balance sheet very, very nifty and keeping it largely stress-free. So that what has happened really is that overloading of debt in the last 10 years have broken a lot of balance sheets because there was a lot of exuberance, there was irrational lending. We don't do that. We're clearly identifying the capital gap, which can be easily and is obviously being met by the current demand or by the current sales volumes. So we're effectively only creating that plug, which is what has transformed a stuck project to a completed project. If you see when you talk about Swami Fund, they talk about, close to about maybe 50,000 homes that need to be completed and delivered over the next couple of years. There is no problem with that. They just need that delta money. They just need that acceleration capital. They just need that startup money to reinitiate a lot of things or to accelerate and complete things. Because there will be times where there will be asset liability mismatches. So we're just plugging that. And that is the support that we provide, which is hugely appreciated, which people say, well, you're okay investing for a short term, exiting and doing something else with your money. Unlike most of the friends and peers we found, which have liked to invest for the longer term, keep their capital out for the longer term, we're okay rotating our capital. Our capital has to be solution based. It has to be able to help the project and not just earn profits for ourselves. It has to be a win-win for both parties.
Tell me a little bit about the projects that, or rather the focus in the Middle East, in UAE. Tell me about that fund also, and why the UAE?
We have learned a lot from India. India has been a very strong growth story, and we've been part of their journey as Nicest Finance for over 11 years, and as in other assignments for another 5-6 years. So, we don't want to be cocooned only saying it's only India fund. How do we take the learnings of our home country and apply to other emerging markets who have the aspiration, who are showing the growth trajectory, but need institutional capital, need people who understand how to work those asset classes, who don't need fragmented money, who don't need only family money or uninstitutional capital. They need people to be able to generate their cities on a more sustainable scale. So that's really where we realized that obviously also since post-COVID, UAE became a very large differentiator within the geopolitical landscape. Again, a very anti-fragile country. Whenever there's disruption globally, people will come here. We're an anti-fragile operator. We're an anti-fragile fund. It was a natural alliance. Saying that, okay, here's an economy which is seeing a lot of exodus of people from other geographies in an anti-fragile environment, and that is where the consumption is required. But they need proper asset classes, they need homes, they need offices. What if we can actually buy them? What if we can actually be the largest provider of rental homes in the UAE? Because that's a rental market. Unlike India, which is not so much of a rental market in an organized way, it's a 95% rental market, because it's got expats. 90% people are expats.
Amit, I want to talk to you about one other aspect of your business, which is the transaction advisory services. Tell me a little bit about that, what that entails, and why is that an important part?
We realize we're not a bank, and we shouldn't behave like a bank. We're a partner. And we're a partner with our capital. And a partner has to not just give money, but also give advice as to whether that money should be utilized, how much should be utilized, what should be done with the capital, or are there other ways to solve a problem without money? Because I don't believe money is the only plug. There are issues of governance, there are issues of sustainability, there are issues of technology, there's issues of human resources, there's issues of market presence, of market penetration, of branding. There are so many allied things which money can't solve. So when we started seeing in the last 8-9 years almost 450 to 500 trades every year, and we could hardly invest into 15 or 20 a year, we saw there was a very large set of capital seekers, good quality capital seekers, who did not somehow fit into our parameters because of certain issues. They had a very large land bank, but did not have enough equity on the balance sheet. Let's monetize that land bank. Let's monetize assets which you cannot consume in the next 10 years. Okay, bring that equity back, suddenly you become very fundable. Suddenly you have a very large amount of presence in a location which is, let's say, tier 1 and emerging, but you do not know how to make contemporary products. You have the vision. Let's tie you with the largest developer in the region and make a joint venture. Then you suddenly become, so you have the land bank, you have the vision, you have the local skills. So let's go ahead and tie up with the largest people, which is what foreign developers have done. They've come to India, done a joint venture. Because it's very hard to work local markets without local know-how. So when a national player wants to go to any new market, they will need local expertise.
Of course.
I said, that's what we are going to provide to you. So I think just creating that focus, so our capital becomes a very important plug, but more than that, the solutions that we provide. Because when we're investing, we're looking at a solution that is sustainable. It is not just a short-term plug. It has to be a sustainable, effective outcome for them for the rest of their journeys, right? So that's really what we do with advisory. It's a very important part. It constitutes almost 2/3 of our income, because for every $100 we invest, we're able to do 5 times more work, or we're able to unlock $500 worth of value for our investee companies or for the marketplace. So obviously that becomes a very high value accretive business for ourselves.
Well, Amit, it's great to know about this part of the transaction advisory business. Before I let you go, one last question. You're going public, so congratulations on that. But what are the future plans for the company? What are you going to do with the proceeds, and what are some of your future benchmarks?
It's obvious to me that financial services will play a very large enabling part in the growth of an economy as it becomes the third largest in the world. And for that, every capital provider needs to institutionalize themselves on a global scale. Our aspirations are very clear. We are in emerging markets in India and globally. We are there for domestic and global capital. We are there to bring transparency, governance and sustainability in our business practices. And the best way to show that is by going public. By doing that, obviously the growth capital will allow us to accelerate our business, to distribute our funds better globally, to set up licenses in multiple geographies. We're in India, we're in SEBI, we're in GIFT City, we're getting more licenses. We're in DIFC Dubai, we're getting more licenses. We'll need enabling structures in Mauritius, Singapore and other markets where our teams, our people will be sitting to enable those markets to bring capital to our strategies. So the Asian money coming through Singapore, the Western money coming through Dubai or Mauritius or other structures where we will be present, we'll be talking to local investors. We're getting that kind of capital demand today with our journey, but they need enabling structures, they need people on the ground, they need licenses, we need proper frameworks, we have to be fully compliant. That needs capital. So when we are grow at double the pace every year and double our AUM, double our revenues, double our profits every year, we will need this growth capital to create that injection. So far we've been bootstrapped, we use internal accruals, but today the market is gravitating significantly in favor of India and India managers.
Fantastic. Well, it's great to know all of this, Amit. It's been a pleasure interacting with you. All the very best for the way ahead and for a public issue. Ladies and gentlemen, that was my conversation with Amit Goenka in this special episode of Exploring Infinite Possibilities in Real Estate Finance. Thank you so much for watching.